May profits be upon you. Welcome to another weekly Forex Forecast. We're looking at the US dollar index, and I apologize for coming in so late today. I was hoping to have this done a little earlier, but we have storms running through Georgia, and my power has gone out twice already. Problems last weekend, problem this weekend. Sorry about this, folks, but we persevere. All right, let's look at the monthly time frame. On the monthly time frame, I am bullish. Why? Because you can see it's obvious, in my opinion. Uh, we've been bullish for quite some time, 2009 all the way up to current pricing. Now, look, you can see this is a key area for me. All right, we make a low here. All right, that never gets lower. This is the lowest it's been since 2008. This was the 2008 March. Was it April? Yeah, March low. All right, and then we pull up, we make a higher low, we make a higher high, breaking this breaking this high, breaking this high. All right, this is the one that counts. Actually, this is the one that really counts right here. All right, and then we make a new low and a new higher high. And then this is what I've been saying for the last several months, right? That this may be a potential higher low for the next higher high. Get off me. All right. So this is what I'm looking at. This is why I'm thinking, this is why I'm saying this is bullish. All right. When you keep making uh, breaks of market structure here, break of market structure here. All right. And the market is protecting the lows, protecting this higher low. Um, you have to just maintain that the bigger picture, the macro view, is the market is bullish. And that's my case. If you want to say, oh, this little area here that says that we've been bearish or whatever, yeah. For what reason? You have to look at the reason. Is it because we're breaking market structure to the downside, or did the last break of market structure was bullish, and this is a higher low? Sorry, this is a higher low here. Are we in a pullback? Is the question. Are we reversing? Is the question. Why? Is the question. Okay, so on we have an upward ascending bullish channel here. All right, and that's giving me some reason to think this may not be uh, uh, where we see the market break to the downside. All right, we still have a protected low here. All right, that led to a higher high. So this is going to be a strong low, and I am looking for the market to quite possibly touch right here at this order block. All right, this here is an area that if we look at it on 3 months, on the 3 months, you can see this was the low made. We have a pull up. We kept the low, and then you saw a V-shaped recovery on a lower time frame where the market pushes up, but it kept that low protected. All right, we may see a revisit to this area. We may see a revisit to this area. Okay, that's the possibility. There is a small fair value gap right here that the market could, find the market find itself bouncing from. But I'm going to mark out some monthly areas that I think will attract price, will draw price to it. This low right here. That is a liquidity low here. And there was another one in here. Right below these lows. You'll see the opposite on the Euro USD. Right below these lows, there's a fair value gap, that has not been tapped into yet. But there's we may not see that get tapped at all. All right, but I do like this low. But I do like uh, these lows here that could possibly, if the market continues past the order block here and mitigates, comes all the way down here and mitigates. Hey man, we may see the market get down that low with a wick, and then we could see a possible turnover, keeping and protecting that low as a strong low and moving the market up higher. Now, I have reason to believe that right here is where we're going to make uh, an area where I would be looking for the market to turn, and that is at I want to see if we take this low. If we take this low, there's a lot of stop losses under here where people thought that we would be heading up higher. All right, this one swept out this low. All right, so I'm looking for this one to hold. All right, and I want to see the wick. All right, you hear me talk about these wicks all the time. All right, I want to see the wick here, 50% of this wick, this large wick. I want to see that if the market is to continue bullish, I don't want to see it get past the 50% of this wick. So let me get you on the right one. Boom. All right. Simple. This is 50% right here of this wick. I want to see the market, if it comes down here, to not close below that low if we are to continue up bullish and continue to protect that low. All right. So that I don't have a reasonable expectation that'll happen. I don't, because this up close candle was closed below. All right, that looks that's not the look I need or want. But we're in a young, we're in a month that has not ended yet, so this isn't the close here. But look where the market closed on Friday, right on the line of this ascending channel. So I'm hoping that it finds support somewhere in this area and turns around. We'll see. Let's go to the weekly. The weekly gives an interesting turn. All right. Are we bullish or are we bearish? This is neutral, folks. Look at that. Look at this. We're in the middle of this. This is a mess. All right. That's a mess. All right. But you can see the wick on the weekly. You can see the 50% of that wick and how we're beaming into it. I would like to see the market find support between that low and the 50% of this wick. All right. We have two liquidity points, and these are the ones I'm marking. This one, we just took it Friday. If I can get to it, we just took that one out Friday, right? And this one could be the one we take out this week. This is the one I will be watching for a turnaround from. Okay, because then that would play out. It would play out that that 50% of the wick would take this. We take a liquidity low and turn around, and we protect this. The low remains protected. You understand? If the market closes below the 50%, that would be a bearish indication for me, and I would think we would be looking at this as the next target. Got it? The next target for liquidity. I'm not looking for that right now. But on the weekly, we are bearish, and we have closed below 3 up close candles. All right, this is great symmetry here, because what you can see is the market. Let me take this out. You can see that the market went down here. This is an impulsive move down, breaking these two candles. This was the change in the state of of delivery. And if we use our Fibonacci retracement tool here, let me see. Boom. All right. You can see that the market put this was the dealing range. All right. This was the change in the state of delivery. All right. This is our order block. You understand? And the market pushed down, pulled back up into OTE levels once the 618 and dropped hard from there. We should have seen that coming, but I didn't. If you wanted to take shorts here, you could have. I don't like this the fact that we're still in a consolidation. Did not like that, especially in the middle of one. I didn't want to, I was looking at the S&P and the Nasdaq, but this drop came out of nowhere, and you can see that it hit that OTE level perfectly, and we have this. Now I'm looking for a price to possibly pull back and test the lows here. All right, test the lows on this side for another push down before a break up and over. That's what I'm looking for. So I am still bearish. I am bearish right now on the weekly. On the daily, I'm definitely bearish, and you see the levels that I have marked already for liquidity targets, and you can see that we have what I would call a mitigation block here. Well, it's a breaker, really. Uh, you can see that we had a break here and a break of these highs, these internal highs. Boom. And then down. All right. We crashed right through that low. So on the other side, I'm looking for it to act as a breaker as it comes back up to it and continues down. And maybe we get a bounce at the 50% of that weekly and monthly wick, which would send the market back up and protect this low. All right, that's what I'm looking for. If we break higher than this, than the breaker itself, it'll be used as support for the market to move higher from there. I would take it as a bullish indication. All right, so you got my analysis on this. All right, be careful with it because the markets, the time frames aren't aligned. All right, the monthly is bullish. I mean, it's bearish. Yeah, it's bullish. The monthly is bullish. The weekly and daily, the weekly is more neutral than not. But the daily is definitely bearish. That weekly gives me some pause because we are in the middle of a consolidation here. Even though we had a hard drop to the downside, I'm not loving that at all. Let me change that real quick. It didn't change at all. All right. So when they're not aligned, it's hard to say, hey, we should be looking bearish. We're still within the highs and low of this range. You know what I mean? This isn't great. So if the market starts to move back up, and I expect there to be a move back up after taking this liquidity low here, all right, I think it's going to be short term for a move down to take out this low. You understand? And then maybe bounce off the 50% of this the wick. All right. I will see you in the next video. Thank you for watching, and make sure you check out the Euro USD, which I'll put up right behind this one. All right. See you in the next video.